Today, we're going to talk about one of the most popular banks in the world, one of the United States' Big Four banks, Bank of America. Most Americans know of this major bank, and even if you're not from America, you've probably heard about it before. Not necessarily good things, though. Yes, Bank of America is known for not being well-liked, and there's good reason behind it. But before we get to that, let's first try to understand the history of this bank and the remarkable path that led to its meteoric rise. The origins of Bank of America can be traced to the inspiring story of its founder, A.P. Giannini. Amedeo Pietro Giannini, more commonly known as A.P. Giannini, was born in San Jose, California in 1870 to Italian immigrant parents. Giannini's father was a farmer and fisherman, and his mother ran a small grocery store. He started working at his stepfather's produce business at a young age, and this helped him develop a strong work ethic and an entrepreneurial spirit. His experience of working with his stepfather also gave him valuable insight into the needs of local businesses and communities. Fast forward to 1904 when Giannini co-founded the Bank of Italy in San Francisco. This happened after Giannini's father-in-law, who owned a portion of a small bank in San Francisco, died and left Giannini to take up the position of a director at that bank. But Giannini wasn't happy with the business model and strategies adopted by banks at this time, so he decided to open his own bank with the primary objective of providing banking services to the working class and immigrant populations who were overlooked by traditional banks back then. Giannini's innovative approach included longer banking hours, small loans, and lending to borrowers who lacked the collateral typically required by other banks. This customer-centric philosophy was revolutionary for its time. But the true test for Giannini's bank came after the devastating San Francisco earthquake of 1906. The earthquake and the subsequent fires had left the city of San Francisco in ruins, and traditional banks were either unable or unwilling to assist their customers during this crisis. Giannini, however, saw this as an opportunity to help the people of the city. He quickly moved the bank's funds out of the city to protect them from the fires, and then set up a makeshift stand to conduct banking operations. During this time, Giannini provided loans to people and businesses based on a handshake and their character, rather than the traditional collateral. And he also extended loans to help the city's residents rebuild. He earned the trust and gratitude of the community by doing this. Giannini's bank was one of the few financial institutions that were operational right after the disaster, and it played a significant role in the city's recovery. In the years that followed, the Bank of Italy continued to expand its operations, eventually becoming the Bank of America in 1930. The bank continued to focus on serving the needs of the working class and small businesses, becoming one of the largest and most influential financial institutions in the United States. In fact, the first modern-day credit card was introduced by Bank of America. In 1958, Bank of America introduced the first credit card, known as the Bank AmeriCard. This was a revolutionary concept that allowed consumers to make purchases on credit, pay back the amount over time, and carry a card to access credit wherever they shopped. The Bank AmeriCard eventually evolved into the Visa credit card, which has now become one of the most widely accepted payment methods worldwide. Then, throughout the 1960s and 70s, Bank of America expanded its reach by acquiring several regional banks. This period of expansion included the purchase of Seafirst Corporation in Washington and Security Pacific National Bank in California, among others. In 1998, Bank of America merged with Nations Bank Corporation, a fast-growing North Carolina-based financial institution. This merger created the Bank of America Corporation and significantly expanded its footprint in southeastern United States. The newly merged Bank of America became one of the largest banks in the country. Bank of America further solidified its position as a major financial institution when it acquired Fleet Boston Financial in 2004. This acquisition expanded its presence in the northeastern United States and made Bank of America one of the leading banks on the East Coast as well. The bank also acquired U.S. Trust, a wealth management firm, in 2007. This acquisition helped grow the bank's private banking and wealth management services. In 2007, it also acquired LaSalle Bank Corporation, further expanding its presence in the Midwest. Then, in the midst of the global financial crisis in 2008, Bank of America acquired Countrywide Financial, which was the world's largest mortgage lender. In the same year, it also acquired Merrill Lynch, one of the world's largest financial services companies. In hindsight, these two last acquisitions didn't pan out well for Bank of America. Let's talk about it. Bank of America's acquisition of Countrywide Financial during the housing crisis of the mid-2000s turned out to be a decision with huge negative consequences. This acquisition made Bank of America the owner of one of the largest and most troubled mortgage lenders in the United States, which soon faced numerous penalties, lawsuits, and criticisms. You see, Countrywide Financial was highly involved in giving out subprime mortgage loans. This means that people who didn't qualify for a regular mortgage would get a subprime mortgage at higher rates. These mortgage loans had a higher risk of default, and as the housing market collapsed, so did the value of these mortgages. Bank of America inherited a massive portfolio of such high-risk mortgages through the Countrywide acquisition, and the deteriorating value of these loans weighed heavily on the bank. Bank of America also had to face numerous penalties and lawsuits related to mortgages issued by Countrywide. Many of these lawsuits alleged that Countrywide had engaged in predatory lending practices and that it had not disclosed the risks associated with the mortgages. Bank of America's acquisition of Merrill Lynch also came with its share of criticisms. The deal took place amidst the financial crisis, and some critics argued that Bank of America had overpaid for Merrill Lynch and failed to conduct sufficient due diligence. This criticism became even stronger when it was revealed that Merrill Lynch had incurred substantial losses, which were not disclosed before the acquisition. Furthermore, the way executive bonuses were handled at Merrill Lynch raised controversy. It was reported that Merrill Lynch had paid out bonuses worth $3.6 billion to its executives just before the acquisition. Firstly, this was done without informing the voting investors at Bank of America, and it was also seen as controversial given the company's financial troubles. But criticisms towards Bank of America weren't limited to just this. The bank faced criticism on multiple fronts, most notably for customer dissatisfaction and claims of discrimination based on race and ethnicity. Customers of Bank of America have continuously complained about unexpected fees, account management issues, and difficulties in resolving problems through customer service channels. One incident that stands out is when Bank of America introduced a monthly debit card fee in 2011. The bank faced severe backlash from the public, leading to reversal of the decision. In addition, technological glitches and service outages have also contributed to negative customer experiences. It doesn't come as a surprise that Bank of America has often been the lowest rated bank in American customer satisfaction indices. Coming to the allegations of discriminatory lending practices, particularly in relation to mortgage lending, the bank was found to be lending to Hispanic and African American borrowers at higher interest rates than rates provided to Caucasian borrowers with the same qualifications. Bank of America has had to pay substantial fines and settlements as a result of various legal actions related to both customer dissatisfaction and discrimination claims. In 2011, the bank agreed to pay $335 million to settle allegations that its Countrywide unit had discriminated against minority borrowers by charging higher fees and interest rates. In 2014, the bank reached a $16.65 billion settlement with the U.S. Department of Justice over allegations of misleading investors in the sale of mortgage-backed securities. This settlement was one of the largest in U.S. history. Bank of America has also faced fines related to its hiring practices involving discrimination against African Americans. There have been many such settlements and fines that Bank of America has had to pay, owing to its discriminatory practices towards both employees and borrowers. This should explain why Bank of America has faced so much public backlash and had such negative publicity since the 2000s. It's especially sad to witness this as AP Giannini founded the bank with a mission to provide services to the minorities in his community. Now, while Bank of America's sheer size solidifies its standing as a major player in the financial industry, these criticisms and legal challenges highlight the importance of ethical business practices and the need for financial institutions to prioritize customer satisfaction and fair lending practices. What's your opinion of Bank of America? If you're a customer of the bank, do you agree with the issues we've highlighted in this video? Comment below and tell us. We love hearing from you. That's it for this video. Thank you so much for watching. Please don't forget to hit the like button and subscribe to our channel for more interesting content on some of your favorite companies. And hit that bell icon so that you're notified every time we drop a fresh video. See you next time.